to Nirmal Bang, ladies and gentlemen. I'm Hira Dadia. We have with us Ria Singh, technical analyst, currencies joining in. Ria, welcome to the show. Ria, firstly, you have the Fed minutes that were out last evening. What's the kind of impact that we are seeing with regards to the dollar and in turn on the Indian rupee?
Well, if you look at the from the Fed minutes, they have clearly stated that they'll be starting off with the quantitative tapering as well. So what they have stated is they'll be doing 95 billion every month in reduction in the bond holdings. So this means that there will be they were already doing tapering. Now they'll be also continuing with the stopping the quantitative easing and starting off with the quantitative tapering. So this is the two factor that will be leading to reduction into the liquidity into the US economy. So in response to that, we already saw dollar index moving with a strong momentum, and it's trading up, above the 99 levels, 99.66, around those levels. So dollar has already gone strong into the intraday sessions. Also, if you look at if you want a further guidance from where the Fed will be heading, they have stated that there is a room for 50 basis point into the next policy. So 50 basis point rate hike could be in the picture in the next policy meet. So all in all, I think as the Fed is moving towards a tighter monetary policy, there will be some effect that will be coming into the credit facility or into the FII inflows into the Indian economy. And the same will be reflected into the Indian rupee. Now, from the past 2 days, as these two perspectives were taken into the picture, Indian rupee has already rallied from its, appreciative levels above the 76 levels. So we are seeing some weakness into the Indian rupee from those. Now, I think there will be so many factors that will be, taken into picture as to what will be the quantum ahead. Of course, they have announced 95 billion into the reduction into the bond holdings, but of course they can't do it very aggressively. Taken into the picture that if they remove the liquidity too fast, there is a danger of recession. So in order to avoid that, there will be many such announcement or steps that will be taken in order to avoid the probability of recession happening. So going forward, I think dollar index will continue to be on the higher side. It has not even breached the level of 98 and so forth. So I think if the dollar index stays between 100 to 98 levels, it will be on the higher side. And the same will be reflected into the Indian rupee, where it won't be able to appreciate below the level of 75 or 74.50.
Right. So, Ria, with this, tomorrow you have the RBI policy meet as well. Are we seeing any impact on the rupee because of the RBI policy, and what's your anticipation?
Well, as far as the RBI policy goes, so I think the stand, there could be a change of stand from accommodative to neutral. Secondly, I think the theme would be to safeguard the growth and to control the inflation. Now, if you look at the inflation, it has been into a acceptance level between 4 to 6, around those levels, 4% to 6%. So controlling the inflation will be a major task for the RBI. What can be anticipated with respect to that? If you look at the inflation part, there is 4 factors that have resulted into the high inflation in India. That is price monopoly with the big firms. Now, if since the COVID-19 phase have almost passed, there will be a pent-up demand into the service sector that could be reflected. And if you look at the current petrol prices, they have started reflecting into the domestic at the domestic level as well. So they have been transferred to the consumer level as well, and the food inflation. So how the RBI will take steps with respect to these factors, and how they'll be able to contribute in controlling these factors would be a major lookout. Secondly, I think as far as rate hike goes, it will hold off for the rate hike yet, because if you look at the economic recovery, there is still economic recovery that needs to come. So and there is a need of the liquidity that is already there into the market. So the liquidity that there is there into the market, the support of that is still needed in order to get the economic recovery a much accelerated pace. So rate hike will not be happening, but of course some statement with respect to the cool off into the liquidity, or how they'll be able to get some of the liquidity out of the market. I think those will be some of the highlights that could be seen into the RBI policy.
Right. So what are the key strategies that you would suggest, Ria?
The strategies that one can go for is going long into the USDINR above the level of 76.50 with a stop loss at 76 and target at 76.30, 76.40. You can also go long into the USDINR 76 call around the level of 0.21 with stop loss at 0.10 and target at 0.35, 0.50. The expiry of this option call is of 13th April 2022. You can also go long into the pound INR above the level of 99.67 with a stop loss at 99.30 and target at 99.92.
So those are the strategies one should be watching out for as well. Thank you, Ria. Thank you, participants, for joining in.
Thank you.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.